Hello, hello, hello. Can you hear me? Let's wait for a couple more people to join, and then I will talk about different things. I plan to talk about risk management, leverage, and prop firms. Not in the thing like say, hey, buy this or this platform. So no advertising. But yeah, talk about a few key things. If you have any questions, feel free to ask in chat or unmute yourself, whatever. So, yeah. Perfect. What is the first thing you guys want to talk about? Should I start with risk management or leverage? My scalping module. So, the first thing I think I want to talk about is leverage. I don't have anything, so let's get into it. I will just share my screen and open Paint. That's the simplest thing, but then I will as well open the chat on my phone so I can see if you guys have any questions. So let's see. And perfect. So leverage. In my opinion, it's a great tool, but a lot of people use it wrong. So a lot of people say, hey, don't go over 1 to 5x leverage. If you are scalping, use very low leverage. Or other people would say, hey, you are swing trading, don't use leverage. So if we move in the end of the day is only $100, but 10x leverage. So everything is the same. You have a position size of $1,000. So you risk exactly the same, but you can now, because Now, because you use 10x leverage, you can now split your bucks that you have in trades instead of a single one. And now you can further like risk only. And let's say you are a swing trader, you have X months. One month. When you use only one position in 1 month. 10x leverage. So if you 30 days a month, that is over and recommend this. Theoretically, I with X to still get a position size 1 bucks. So the question is, what is the at the end? So there is no difference. The only difference is that you can open more position, one position or two. Position. And so say, okay, then, but still 200x. Few. So, and let's say, so I'm normally trading on the 5-minute and 1-minute chart, as on the 5 and trade on the 1-minute chart. So the problem, okay, you are trading with, I don't know, support resistance. Say, for example, this. Yeah. So something like perfect. And then you would say, okay, price moved up, down, got a retracement and move back. So then you would say, then you can say, okay, I can set my entry here, plus this week, and have a 3.3 risk reward. But, or yeah, that's lots of people. What I have seen is that say, hey, I got 7% of profit and I got 10% profit, whatever. So I'm a person, I don't care about the percentage. It means nothing. The only thing that matters is your risk reward at the end of the day. If you have, for example, in the 200% gain, but 200% gain, but it's only like one risk reward or 2R. I don't see the point. Sorry, because if you risk 1%, then and get out perfectly, you made 2%. I don't say 2% is bad, but it comes in the end of the day all down to risk reward and not to percentages. So, and let's say here you took this trade, 3 risk reward. If you got in down here, got out up here, you would have made $339 of profit. So, but because you had a 7% gain with a 2% loss. So you had a 2% loss. That means you need, how can I explain that? You need way more margin to get into this trade, because if your stop loss is bigger, the bigger it gets, the less margin you need. And so if you have like a 5% stop loss, you can, as I said, you can use 200x leverage or whatever, but use it on cross. And I will show you later how I use leverage. But the thing is, here you have 2%. And when I trade, for example, on the 5-minute and say, okay, I want to get in here, like so, can wait, that's better. So on the 5-minute, and you would say, okay, I will get in, like you want to trade this range, got in here, stops maybe, so maybe something like this. Your stop loss is way smaller than stop loss. And when the swing traders, they have stop losses of 10%, 20%, and not the margin, and you have 0.1%. And the problem is, cannot even trading on a fund account, and I cannot even risk more than 1% trade because I don't have the margin. I have leverage and I use everything, but I can't use I can't risk more than 1%. So what I mean is not, okay, you have a $100 account and you risk $1. That's not what I mean with you risk 1%, because I have a different understanding. So let's say, for example, I at the moment I'm trading with crypto funded trader. I'm a bit down because of a stupid decision I made earlier, a couple of weeks ago. So the so let's say, okay, you're creating a new order and you do a pending order. And then let's go to my BTC scalping and open the positions. Like this position here. So let's close this. As you can see, you have, or we have a 0.2% stop loss. So if I take all these numbers and put them here in my stop loss and take profit, and just put them in, my entry price, let's copy that in here, my take profit price, I take profit here, and my stop loss here. And okay, I'm using a margin of 130 USD. I have 1,850 USD available. when I open the trade with one lot, so with a volume of 0.1, which equals 665 USD, you will see, okay, when my stop loss triggers, I lose one US dollar, which is equal to 0.03%. So let's say, okay, I have nearly 5K account. I want to risk 1%. So then I have to increase my volume. Perfect. Why isn't it? Ah, I love it. Why is 9.7 is 6667? Wait, my stop loss. I love it. Now. So now you can see, okay, my stop loss increases. Now, perfect. So now I'm risking 1% of my part. So when I share this screen, like here, only this, people would say, you're crazy, you're risking full port. And I would say, yeah, I'm risking full port because I risk 4,790 USD and I have 4,850 USD available. But I can only use risk 1%. And this is an understanding which where a lot of people get things wrong because they think, okay, you're risking more than 1% means you have a $100 account and risk more than 1 USD. And this is not how it works. So I always go for my stop loss. So how much I would lose at this price, and then I add so much margin to the trade that I lose 1% when my stops hit, and not I take like $10 and this is equal to 1% of my account. And so here I would risk, or I would use, not risk, nearly 100%. And people would say, how can you do that? So you're crazy, you're risking your whole account. And I don't know why, but a lot of people have, or a lot of people think this is how leverage works. And that's why they say, okay, I have to use low leverage. But it's not in the end, it's not the leverage. It's only the position. It's only about position sizing. Because as I said earlier, now I can use, for example, 200x leverage to minimize my margin. So, for example, I have here, I would use 4,790 USD. I can't adjust leverage here, but I will explain it, hopefully that you can understand it. If I would now use 10x leverage, I would only need 0.036 lot, because I would then have a margin of 479 USD, because, as I said earlier, 10x leverage means you need 10x, you can divide your margin by 10. So you would use 1,000 USD margin. Now you would only need 100 USD margin. And so I can, in the past, I used Maxi, and a lot of people complained about, okay, you use 200x leverage, and I got kicked from so many servers because I posted P&Ls of percentages with minus 4,000%, and people think, why? This is so risky and whatever. It comes down to that you don't you have to trade cross, not isolated, because this is another thing. People say, okay, I don't trade cross because I can lose my complete portfolio. And yeah, that's true. But this is not for me the thing. Okay, I use isolated because now I can't lose my whole portfolio. The problem is when you use isolated and your stop loss is 10%, you have to say, okay, I can use 10x leverage max, because if I use more than 10x leverage, my liquidation price is higher than my stop loss. And we want it different so that your stop loss is higher than your liquidation price. And if you use cross and 200x leverage and adjust your margin, as I showed you in, for example, in Max, you have cont that you can choose. And when you choose your cont, you can use numbers that are so small that you can even risk that much that when your stop loss hits, you would only lose 1 penny. And this is a thing that people get so wrong, in my opinion, because don't go for, okay, I risk 10% or I use the slider to say, okay, I want to use 10% in that trade. No, use cross, use max leverage, and then adjust your margin. Because as I showed you here, you just have to press the minus button, and then your stop loss. Okay, perfect. It changes again the wrong number. But that's not what I wanted to do. Perfect. And now your stop loss changes here. So it doesn't change the stop loss, but how much you would lose when your stop loss get triggered. And I always did it like this, so that I say, okay, I risk that much. So the only problem is when you want to get in a market entry on a very low time frame, because when you want to get in a market entry on a very low time frame, you cannot say, okay, I use 10% of my account now. So you have to click multiple times, and this can cause that your trade, what you wanted to take, is already gone, because you spent so much time on figuring out how much margin I need to put in to get my stop loss right. And but in my opinion, the most part of people on the Foxian community server are swing trading, like on the 4 hour, on the 1 hour, even on the 30-minute or on the weekly, or like Jason on the 3-day chart sometimes. The moves are very small and your stop loss is big, and this gives you enough time. So like to set something up, you need, let's say, max 1 minute. You don't care about 1 minute which is gone on the 3-day time frame. You don't care, but you care on the 1 minute time frame, because 1 minute you have so much volume which is going up and down, this is going everywhere. And on time frames you need the you need that you say, okay, I put in 10%. But that's why I use limit orders most of the time, because then I can say before the trade is even executed how much I would risk. And when I say, okay, market order, and uncheck both of these and bring it down to say 1 lot and put my stop loss on, let's say here, say 400, then it constantly changes the amount, because the price is moving all the time. But when you have a limit order, you have enough time to set up your trade. And that's why I love it. So when you're swing trading, you have so much time. You don't have any pressure. You have so much time to set up your trade correctly, check all your numbers. And if you follow this system, which I showed you, it's awesome, because okay, you have high percentages which are going up and down, but but the only thing that matters is your stop loss. And if you say, okay, stop loss is minus $50, minus $50, not from the price, but from my account, and you have a 5,000 bucks account, you can only lose 1% of your account. And that's why I use the system. I don't know where I found it. I guess in a mentorship, but I am not sure about that. But for me, I think it's a standard thing, because since I'm using leverage like this, I can use 200x leverage without complaining, wow, it's that risky. No, it's not, because I have calculated risks. I use 200x leverage, I adjust my margin in that way that I am still only capable of losing 1% in a trade. I can say as well, okay, I want to risk maybe 2%. Then I take 2 times the margin. It's easy if you understand it. It's easy. I know it's a bit hard to explain, but I try my best to explain it to you with. Yeah, my English isn't that good, but I try my best. But this would be my explanation of how I would use leverage. So if you have any questions, feel free to ask. If there are no questions, I would move on to prop firm trading. So if you have any questions, then I would move on. Wow, Sherlock is in here. Didn't notice. Sherlock, hope you're doing good. Hope everything is fine. So the next thing is, as I said, prop firms. I know a lot of people say, okay, don't use prop firms, only use it when you have your strategy, when everything is working, when everything is working for you, when you're profitable. And I would say, okay, don't paper trade like on TradingView. I would say, hey, go ahead and buy a funded account. Buy the cheapest one. So you pay $55, okay? But you are not forced on that funded account. The most of the funded accounts are without a limited time. So you can take your time, you can make your steps further in trading. And so you can say, okay, I don't have to risk 1% on that trading account. Like when I begin with trading and try to find my way, I can say, okay, I can risk only 1 USD per trade. So your trading capital on that funded account goes down slowly. Okay, but let's say you have this funded account, I don't know, for 6 months. You found your strategy because you had a great mentor like Sherlock, and everything is working great for you. Then you can say, okay, I have still this funded account and still the opportunity to trade it up. The only money I've invested is for example, for a trading for 5K funded account. So if you funded account, okay, you lost it. You lost $50. But if you haven't lost your funded account, you have still the chance to get funded with only your $50 you have invested in the beginning. So when I started trading, I said, okay, I take 100 USD from my bank account, or for me, euro from my bank account, transfer it to Maxi, and then trade with that money. And guess what? I lost $100. I lost $200. I lost more and more. So the easiest approach would have been that I would have spent $50 for a funded account and then risk, for example, 0.01%. So I have 5,000 trades that I can take to get to my limit, or even I think it's 10,000 when you have then a 10% max limit on that account. I think it's 1,000 trades or 10,000 trades. And this is awesome because not every trade you took is a loss. So even when you had wins, you are increasing the number of trades you can take on that funded account until it's gone. So you invested $50, trade with $5,000 and can lose 500 without ever spending $500. So if you know what I mean. So so it's not your own money, but you can make own money with it. So let's say you are, as I said, half a year you are trading, and finally you found your edge in trading, and you finally find your strategy, you got profitable, and you still have this funded account. Okay, it's 9% in loss, but you have still this 1%, which you are away from losing the funded account. And so that means you would have still 4,009 wait 4,500 USD, and this money is still money you can trade with. So you can still trade your way up, become funded, and then everything that exceeds the amount of the funding you can keep with 80% profit. And you only have spent $50 in the first place. And then it's basically infinite money you can make with it. Yeah, you have to say not every prop firm is that good or that bad. So you have to find your thing. Like you want to trade crypto or commodities or stocks, whatever. But you have but there are so many trading so many prop firms out there which are reliable, which share their which share everything, like how much money they have in their saving balance, if all the people that got through the phases and are profitable traders. And if you found a prop firm like this, then I would buy it and just trade on it, because you can't lose your own money besides that $50, but you can, let's say you get funded and you make then 10% every month. Congratulations, you spent $50, were half a year unprofitable, lost $400, but you haven't lost your own money, and now you make $500 every month. And that's why I would recommend for new traders to use funded accounts. If you have a different opinion or anything, feel free to write it in the chat or unmute yourself, and yeah. But these were the things I wanted to talk about. If you have any other things I want to talk, or any questions, whatever, feel free to ask. And yeah, this was I tried to explain it in the best way possible. And yeah, if you don't have that much questions or anything other, maybe you have some coins you want to talk about, or you guys have some coins where you wanted I have a look at. I don't know. Just feel free and share them. For example, can you look into ARP? Sure. not on the 5-minute time frame, I believe. So let's have a look on the 4-hour time frame. So what do we have here? And line, okay. So let's see, we have a support zone down here. And do we have on the check the higher time frames? Well, okay, there isn't much info besides, let's get it on the 4-hour. Okay, perfect. So there is a high chance, I would say, that we are rejecting from the current area like this. We got a doji here as well on the 4-hour. So let's see what the EMA is doing. Okay, yeah. That's what I thought. It's likely that we got a rejection or that we go back up and then break through this as well. This would be my thoughts. So let's see in the 1-hour what is happening. Okay, let's move a bit more down. So what do we have here? Something like this and then something like that. Oh, yeah. So what I would do, what I would always recommend is when you see, for example, that you get rejected at the resistance area or you get a bounce on a support area, I wouldn't jump. I wouldn't recommend that you jump directly in. I think your stop loss will be killed because, for example, if you let's say you move in like here, like this, take profit is here, you will get a risk reward of 4.49. But your stop loss is, as you can see, really small. So, okay, there has to be one move on BTC and you're out. You're out. So what I would do or what I would recommend is always check the lower time frames because as you can see on the 4-hour, as I said earlier, you have unconfirmed bearish bias. Then I would recommend to go to a lower time frame and then like the 30-minute and then search for a pattern or any sort of break. Like it happens a lot of the time that you get a consolidation, like a sideways trend, a channel on such an area. So what I would do is I would wait until we get a breakout here and then we retest and then I would enter on the retest on the lower time frame because let's say for example the price is moving down again and then breaks above, comes down, retesting this trend line and then moves up. You can say, okay, I trade this retest because it's a retest of the pattern and on the 4-hour support resistance area. Then you can say, okay, I move my stops here and take profit is the same. And now look at that. You now have a 12.74 risk reward. And it's even more safe because you have more confirmations. Like you have not only the buyers, which are the bullish buyers, which are presented at the support level, but you have your but they will actually get confirmed from a trade, from a breakout of a pattern of any sort of candlestick pattern or market structure, like when you have a change of character and followed by a breakout structure. These are as well nice nice confirmations to see, okay, lower on the high time frame I see the market is bullish, but now I want to confirm it on the lower time frame to get a better entry, more confirmations, and a great risk reward. So this would be my approach. So then you ask, so this is what I would do. As I always say, do your own analysis. But if we won't get lower than this point, I would definitely would have a look for a retest of this support resistance, of this trend line, on this what is called falling channel, to get the retest of this channel, to get the great entry, great risk reward. And even when you move it more, like let's say it's 1.5%, you would still have 8 risk reward. So this is what I would do. I would wait for a candle, and then I would put my stop loss below this candle. After so you wait for a retest of the zone and then look for the candle which is the most what is called which has the lowest wick. So even then, to get a retest here, you can say, okay, I go, for example, on the 5-minute time frame and look for an even better entry, because maybe I have exactly on that point, I have another, maybe, I don't know, ranging channel with a bullish breakout, or falling wedge, or inverse head and shoulders. So your stop loss gets even smaller, your take profit even bigger, because you are trading still the huge trend. You are still trading the bounce on a very high time frame, but stop loss and your stop loss and entry is based on a low time frame to get the maximum out of one single trade on a high time frame. So I look definitely forward to ARB to be bullish in the next couple of days, for sure. So, okay, take a look at Solana, take a look at BGB and Tyco. They both recover fast and have a steady move. Thanks, bro. How do I identify a fallen wedge? How to draw it? So before I move to further coins, I could you show how to draw a falling wedge? So what you are searching for is let me see, like here. So you have swing points, which are this point, this point. You are creating lower highs and lower lows, like this, for example. And what you can see here, if you connect most of the swing points with a trend line like this, and you take another trend line, then this wasn't that good. Say here, this is perfect. Swing point previous structure, like here. This swing point from the last structure, and draw a line, a trend line, and then you can see that the price is down and always a bit up again, retracement. And it's not a channel because a channel would be a parallel. It's like where to the end, as far the more farther the price is moving, the more compressed the wedge gets, channel gets. And as you can see, we got a breakout here and a retest. So this would have been a perfect entry right here with a stop loss below this wick, like this. This would have been a 6 risk reward trade. So now I would have a look on Ondo. See if I have it in here. I think not. Maybe in my futures list. Ondo. Ondo here. So let's have a look on Ondo. Okay, Ondo 4 hour. Let's go to a high time frame. So okay, as well as ARP, we have a strong support resistance down here. We got multiple rejections of the zone. Let me guess, EMA is bearish. Yeah, what does the keyword? Okay. Here we are really bearish. We got a double top as well. So for me, it looks the same like Ondo. We got a bounce, small bounce of this line. Even here on this demand, I love the demand zones and supply zones from Sherlock, like the 50%. So we got a nice bounce of the demand zone. So I would definitely look for a long opportunity on Ondo as well. Maybe on the lower time frames. Yeah, as you can see, for example, on the 1 hour, we have already formed a double bottom. And as Sherlock always says, sell your house, sell everything if you see a double bottom. I wouldn't recommend it, but I can't do anything against it if you want to. So what I would do is I would wait, like here, if you try it like this. I would definitely wait for a break of structure here at this point. And then, yeah, maybe on the lower time frames, we have anything else? No, not that much. But, yeah. I think Ondo is bullish as well. We were in a strong downtrend with this double top pattern, but for me, it looks good. But I would wait until we get above this support zone again, and then I would look deeper into an entry on the lower time frames to maybe target this high at the end of the day, but with multiple partial take profits like here, and let's see, good one, and then here, like here. So this looks definitely good for buy opportunity. So now you asked about Australian dollar and Canadian dollar. I traded this pair in the past, yeah, with my huge zones. And we are on, okay. We got a nice downtrend breakout from this channel. But as far as I can say, we got rejected, and now we are rejecting from the 4-hour support resistance. So I'm on a low time frame, sorry, my bad. Thought I was on a higher time frame. Let's move to a higher time frame. Set chart view. But still there, you have a nice wick to the upside. For sure you have wicks to the downside here as well, because of this wick down here. As you can see, Sherlock would be proud of the 50% demand zone. So let's draw it in. Perfect. So as you can see, we got a nice move down to the demand zone, and then we got a retracement back up to the 4-hour support resistance area, and now I think we will get further momentum to the downside to this 1-day support resistance zone, and then we check there because there isn't much in this space where the price can reject. So my guess, I know in trading we don't guess, we trade. But even on a smaller time frame, you can see we got a rejection. So maybe move this out of the way. Yeah. We broke this trend line. Well, small trend line. 5 minutes. It's not that strong trend line,